Welcome to the Bloomberg Technology Summit. I'm Tom Giles, and I'm speaking with IBM CEO Arvind Krishna. Arvind, thank you so much for being with us. I'm really looking forward to talking to you for the next few minutes because we're on the cusp of some really big milestones for IBM. We've just passed one, the spinoff of Kyndryl, the IT services business. You're coming up on 2 years, your 2-year anniversary in the helm. It's gone by so quickly. And you've also outlined some goals, some targets for growth in 2022, looking at mid-single-digit growth up from about 2% in the most recent quarter. I'd like to get your overview of how we get to that place from where we are now.
Yeah, so Tom, first, it's a pleasure to be here speaking with you and to your audience. Look, I think all strategies that work have to be somewhat straightforward. I'll use that word. So how do we get from here to there? One, the acquisition of Red Hat was perhaps the first step on the strategy. That gave us a lot of confidence watching the client uptake, watching the accelerated growth of Red Hat in our hybrid cloud, which is another word for multi-cloud, as well as acknowledging private and public clouds. Okay, step one. Step two, take the managed infrastructure businesses, Kyndryl, and spin that out, because that's a different business profile and less associated with where clients want to go in our journey of hybrid cloud and artificial intelligence. Three, we have done a fair number of, I'll use the word tuck-in, but smaller acquisitions, not quite the scale of Red Hat, well over a dozen in the last 18 months, and those help us garner a lot of capabilities. Now, having done all that, have a much simpler company. 70% of the company is focused on consulting and software, both high growth areas in the market. And then we take our consulting growth, high single digits in the long term, though double digits in the last quarter, couple it with Red Hat growth, couple it with software growth, and that gives you the mid-single digit growth. Whereas on hardware, if you notice, I kept silent because I think hardware will be kind of flat if I take a 3-year period. May go up 1 year, may come down the other year, but kind of flat in the midterm trajectory. So that's how we kind of couple it all together. And I'd be remiss if I didn't talk about partnerships. The partnerships we are building with Amazon, with Microsoft, with Salesforce, with Adobe, building on prior partnerships with both SAP and Oracle are examples where we can drive multiple billions of dollars for our partners and for ourselves. So you put that all together, and that kind of gives us the confidence and conviction in our mid-single digit growth based on both consulting and software.
You came in 2 years ago, almost 2 years ago. It'll be 2 years in April. It makes sense for us to, you've talked a lot in recent months about the new IBM that's emerging. And that makes sense to me for a company that's 110 years old, that you're going to reimagine, you're going to reinvent yourself from time to time. We see it with companies that are far, far younger. Give me a sense of when you came in, what was it that made it so abundantly clear to you that it was time to think differently about IBM, and give us a sense of your philosophy and how you keep this IBM that's going to emerge in 2022 from maybe going down some of the same detours that the company went into in the past?
It's a great question, Tom, and one that is maybe one of a few that keep me up at night when I think about that. So let's take some things that are constants. So what has IBM done really well for 110 years, that it has survived for 110 years in this really intense competitive technology world? We really help our clients deploy technology to move their businesses forward. This has been true, I think, through IBM's history. Then underneath that, to unpack it, the nature of the technologies change. It began with punch card readers, went on to electronic calculators, went on to the mainframe, went on to building services and software. But at some point, every one of these has to change. So when I look at it now, and I came into the role, I said, okay, you got to focus on a few things because this is becoming a world of scale. You've got to be really, really good at the things you do. You cannot really be a jack of all trades, so to speak. So he said, focus in on hybrid cloud and artificial intelligence, and put a bit of a caveat, and quantum computing coming down the road. So what fits that and what does not fit that? So vertical applications don't quite fit that. So those are better served somewhere else. So those we're taking out of the company. Managed infrastructure services. People are making their hybrid cloud decisions independent of their own infrastructure. So, okay, that is perhaps better served somewhere else. That then gives you a simpler and nimbler company, and then you go focus all your capital allocation, all of your expenses, all of your investments in those areas. And so that's what you're seeing us do. So that is what became so clear to me. And I think we're seeing early returns of it. This year, if I note the company that is the new IBM without Kyndryl, we did 1% of growth, 2% of growth, another 2% of growth, which are the numbers you're reflecting on. Not quite at the mid-single digit yet. I sort of committed we will be at the mid-single digit in 2022, but much better than the past has been. So I think maybe we are partway to our goal, and we're going to get all the way to the goal next year. But it is really the simplicity, the focus, the nimbleness, and the allocation of capital into these strategies that is resulting in these better trajectories.
And I want to talk a little bit about another way that you have talked about getting there, and that's through acquisitions. You generated over the last 12 months $11 billion in adjusted free cash flow. You have talked about the role, well, I mean, I think most people who look at the Red Hat acquisition, your largest ever, would say that was a success story. You yourself have said more acquisitions are coming down the pike. So I want to talk a little bit about how that fits into your strategy. I think about, if memory serves, about 16 deals completed on your watch so far. Do you anticipate continuing to acquire at roughly that pace and that target size, or is there scope for something more transformative?
Yeah, so I'll answer both questions, Tom. One, so Red Hat was $34 billion. We borrowed money in order to do that because we did that in cash. We'll be down to our correct leverage ratios by the end of this year. So we've kind of paid down the bulk of what we borrowed for Red Hat. Now, if I look at the returns there, I think 17% annual growth there in the business, $3.5 billion and change in revenue when we acquired the business, well over $5 billion this year. So I'd say that's why I think the investors will put and should call that a success. Okay. Now, we generate, as you said, 10 to 11 billion a year in free cash flow. About 6 goes towards the dividend. So that leaves us about 5 and change each year. And we put about 3 to 4 of it to work in acquisitions each year. So when I look at that, that's the business as usual. To extrapolate over 3 years, we said $35 billion in free cash flow. You count 18 towards the dividend, that leaves you 17. So we could say that's the business as usual. And I fully expect to maintain that rate and pace. So, acquisitions that fit into that envelope on an annual basis, yeah, sometimes you may borrow a bit ahead, sometimes you might wait a little, but if over a 3-year period, expect that to be the case. Now, what areas will they be in? Anything that is going to help consulting with the targets that I talked about. So a number of our consulting acquisitions were around Amazon or Salesforce or Microsoft Azure or Adobe. With the set of ISV partnerships we have, expect those will continue. It brings skills in, or it might bring a geography expansion. If I look in software, we've done a bunch around automation, Turbonomic, Instana, to name a couple. And those have been really, I think the initial signs are really promising. So expect that we'll double down there. The areas are clear for us. We'll go in automation, we'll go in data, we'll go in AI, we'll go in security. Those are for sure. Of course, hybrid cloud and management, anything that bolsters Red Hat itself. And so you could think hybrid cloud, containers, and container security, and then those on consulting. Now, I didn't address your question on the big one. Look, size is not a real concern. If I find something that has both the attractiveness of a Red Hat as well as the financial profile, because if it's going to be in that size and scale, it's got to be attractive enough. We'll go look at it, but it's got to meet both those properties. For the first one, those all help towards revenue growth in the business as usual. Though, when you spend billions a year, it's tough to call that business as usual. I think one should take anything that is with a B quite seriously.
Is there any scope? You talked about the $6 billion that goes toward your dividend. Is there any consideration being given to possibly making adjustments to the size of that dividend to give you a little bit more firepower should the bigger deal come along?
Look, Tom, we were quite clear that we are committed to our dividend. When we look at our shareholder base, and we do talk to them quite a bit, we think that they are really looking for a solid dividend. And so I think, and I believe for our shareholders, that is something important to them. You know, as time goes by, we'll generate more cash flow. We said we'll increase our free cash flow by about 750 million a year. So a different way of generating more flexibility is by increasing the cash flow through having a healthy business. And that gives you a lot more finflex in terms of what you can do, whether you borrow or whether you spend cash or how you use your cash.
You mentioned having conversations with investors. I look at the share price. I would be remiss if I didn't bring up a sore subject, down about 24% over 5 years, a bit more than that if you look back over 10 years. Is that weakness warranted, candidly? And if it's not, what is the investor community missing?
Yeah. Look, Tom, I think that what our investors are telling us is that they want sustainable revenue growth. Many of them don't even say mid-single digit or high single digit. They just say sustainable revenue growth. Even if you give us 2% or 3%, but consistently, that is what we're looking for. And I think it's up to us to go prove that we can do that. We intend to do that in this coming quarter. We intend to do it in next year. We've actually set our targets a bit higher for next year by calling it mid-single digit, not just sustainable revenue growth. And I believe what they're looking for is, can you give this sustainably year over year, quarter over quarter? And I believe that that is sufficient to go unlock a lot of value in our stock price. So when you ask me, are you being treated fairly? I would say, if I listen to myself, no, I'm not being treated fairly. But if I look at our track record, then I'd say they're saying, show me. And so we intend to show them. And as we show them, we certainly hope to get back then a fair regard for the demonstration that we will make over the next few quarters.
Let's talk a little bit more about artificial intelligence. It sounds, every conversation I have with IBM executives point me in the direction of artificial intelligence being an important part of the portfolio, particularly your hybrid cloud strategy. Jim Kavanaugh also talked about in the most recent investor meeting the idea that you're still in the very early innings when it comes to enterprise-based AI adoption and scale. To keep that baseball metaphor going, what does IBM need to do to get us into those middle and later innings of the game?
Yeah, look, so data is going to be produced at the rate of 175 zettabytes a year. I'll let the audience figure out what's a zettabyte, but believe me, it's a lot of data. There is no way that traditional techniques will be able to harness all the insights from the data. Artificial intelligence is the only technique we know. So let me point to some examples and then point to the category that we are going after. If I look at what a company like McDonald's needs to do to automate their order taking, whether it be at the drive-through or on the digital app. If I look at what CVS did for COVID-19 vaccinations, if I look at what Citigroup is using to help their auditors look through all the documents that they must comb through really quickly because of what their auditors are looking for against the capital markets and investor desks. These are all examples of enterprise AI. So enterprise AI is what we are after. How do I help my clients really improve their business process, really help improve the quality of service to their end customers, right? That's what's going on in the McDonald's and the CVS use cases. As I do this, as I help a client like Anthem become much better on the digital app and their call centers, it unlocks a lot of value for us. Then you start from those use cases and help AI transcend different applications, maybe in how you do triage in IT problems, maybe in helping you better against your cybersecurity attacks. If you notice the press for the last few days around some of the open source vulnerabilities out there. How do I help a security analyst triage through? In our case, we collect 150 billion events a day, by the way, and that number is only going up across the clients that we serve on security. There's no way humans or classic data techniques are going to be able to solve those issues. Artificial intelligence can. And so we are working on artificial intelligence, that is those use cases, but also can I move it forward and become more and more proactive so you're kind of solving things before they even come up. And that is what I mean by enterprise AI. Enterprise AI, by the way, doesn't typically have billions of examples you can learn from. It may have hundreds, sometimes thousands. So it needs some unique techniques to be able to make sufficient advance. But I really believe that this AI, to use your baseball metaphor, we're in the first innings because I think by my competition, we're 8% of the way in to unlocking the 16 trillion in productivity or global GDP that AI is computed to do by the end of this decade. If you're only 8% in, there is so much more to go. Some of it will go to the consumer companies. A lot of it will lie inside the enterprise.
Let's take a minute to talk about a subject that's on the minds of every company right now in a tight labor market, and that's talent acquisition and retention. When again, I was listening to Jim Cavanaugh's remarks at the most recent conference, and he struck a really upbeat tone about the volume of applicants you're getting, the number of people who are, number of resumes that that IBM is going to look at in 2021. If memory serves, it was something like 5 million. So I really got an upbeat sense from him about your ability to bring in the talent that you need. Tell me about the cost. You also had in the third quarter about, I want to say, margin, a decrease of about 100 basis points. Mm-hmm. How much of that is coming from bringing in the right people and paying them what they deserve and what they demand, and at the same time keeping your margins, your margin declines in check?
So there were two different factors that played into that, Tom. So one, just talking about the margins, then putting it to the side. We have so much demand in consulting, where we grew double digits in the last quarter. We kind of foresee that same happening and continuing for some amount of time, that we are hiring ahead of demand in that part of the business. That causes a margin decline, not in the long term, but in the short term, because it takes you maybe 6 to 12 months to get back your margins since you hired ahead of the demand. Now, I think that's a wonderful problem to have. In what I see as the demographics of being a tight labor market, in the demographics of everybody thirsting for tech talent, if we can have some of that talent inside IBM before it's needed, I don't mind losing a point or two on margin while we are building up then the correct supply to serve the demand that's out there. I see this demand continuing for a long time. Two, so Jim's right. We look at about 5 million resumes a year. We actually at any given time have about 3 million people who we are still in the hopper, are still in our pipeline. So for our hiring of a few tens of thousands per year, that feels pretty good. Now, you're looking at me and saying, okay, how come you guys can do this when the whole world is talking about a lack? Well, we give them interesting work to do. That's one thing. Two, we are pretty global as a company. And I think what the pandemic has taught us is work can be done from almost anywhere. I'll say almost because you do need connectivity, and I need to make sure that it's in places with a good legal system and places where our clients are comfortable that people can get work done. But with all that said, it allows us to tap into a global base of the tech talent. However, even within places where it's really, really tight, like the United States, some problems we work on are so attractive to people. We didn't get a chance to talk on quantum, which I'm really excited about, but we can get our fair share and more of talent around quantum, around technologies and semiconductors like 2 nanometers. I'll throw out some terms like vertical transistors instead of horizontal, getting energy consumption down by 85%, greening, carbon sequestration, all these problems that our scientists and our chemists and the people we hire love to work on. So it's a mixture of global, really hard problems that kind of really make a big difference, and being able to stay the course and letting these people get their work finished to a point where they feel really good about it.
Let's take a minute to talk about quantum and another emerging technology that, or not so emerging anymore, that a lot of people are talking about right now, and that's the blockchain. Both of those are areas where I would say IBM is attempting to stake a claim. I'd be curious to get a sense of how long before these start to make a meaningful contribution to the bottom line for you.
So blockchain has been a really good winner for us already in so many consulting projects. When I look at digital health passes, I look at vaccine passports, I look at what we did in both in Germany and in Canada. I think it's a great example where we become more relevant and that leads to more and more work. I'm not sure whether or not blockchain is ever going to be a technology in its own right, like AI is a technology, but it's definitely one that is being used widely already. But in our cases, it's not around mining and cryptocurrency, which I know are all the rage, but that's not what we do. But supply chain and health systems where privacy is important, those are areas where we think is really important. Quantum, I'm super excited. Now, it is going to be commercial 2, 3, 4 years. We can take our guesses. It's not decades, as some people say, but we just announced 127 qubit quantum computer. By the way, a real quantum computer, not a simulation, not in software, a real physical one that you can go access on the IBM cloud. And we believe, and we put out a roadmap to get to 1,000 qubits by the end of 23. And I think you'll be able to solve some real problems in that one. And that's why we're so excited on quantum. By the way, I think I'll throw out a market number. It'll be hundreds of billions of value by the end of the decade. So now you come back and say, when do you think you're going to get going? I don't think we go from 0 to 400 billion in one day. So there is going to be a gradation over the latter part of this decade on quantum.
You've got a new mainframe coming. We just got a few seconds left. You've got a new mainframe coming out. Tell me, can you give us a preview of what that looks like?
I'll give you one preview. AI and hardware as a processor built right onto the chip, which means your latency to detect fraud goes from hundreds of milliseconds, even tens, down to microseconds. Think of what that can do for our financial system to detect fraud in real time.